Welcome, dear traders. Today, Asian stock markets reacted to Wall Street's moves and started to grow. The period of guessing about the Federal Reserve's interest rate decision has come to an end. The market expected a 90% chance that the Fed would keep the rate unchanged for the second time in a row. The majority was right, and the forecast came true. Markets reacted to the Fed's chief comments about the regulator's next steps. The November 1 meeting is over, and investors are bracing for the next Fed meeting on December 13, 2023. The main takeaway from Jerome Powell's speech was his words about a possible rate cut. Namely, there can be no talk of monetary policy softening at the next meetings. For the regulator of the world's leading economy, there are currently only two options: to raise the interest rate or to keep it at the current level. At the same time, Powell warned that much would depend on incoming economic data. Before December 13, reports on the labor market and consumer prices will be published in the United States. Moreover, no one expects that elevated inflation will return to the 2% target. While Jerome Powell left the door open for another hike, markets seem to be anticipating the end of the Fed's tightening cycle, and the US dollar and Treasury yields were under pressure from expectations that interest rates have perked, as well as from growing fears of a recession. As a result, the greenback dropped sharply overnight from immensely highs near 107 to 106.40 amid falling 10-year US Treasury yields, reaching a two-week low of 4.7%. As a result, the US dollar weakened across the board, and the US dollar index began Thursday's trading session moving sideways within a narrow range of 106.30 and 106.50. Tomorrow, the currency market may react to the release of the US non-farm payrolls for October. Meanwhile, the US currency's G6 counterparts are celebrating their gains, and the dollar-yen pair broke through 150.20 today. However, the fundamental factors are still on the side of the US dollar, so the pair later recovered to 150.40. The strengthening of the use of the yen due to the temporary weakness of the greenback is short-lived. Despite yesterday's pause, the US central bank remains ultra-hawkish, and the Bank of Japan is still ultra-loose. The Japanese regulator's recent decision to loosen controls on long-term interest rates did little to change the balance of power. This measure has been insufficient to narrow the gap between US and Japanese interest rates that have been widening on the currency for years. As a result, the yen was trading in a range of 150.10 and 150.90 early Thursday and remained at a risk of a further depreciation against the US dollar. Notably, all of the charts in our video review have been moving sideways for some time today without any sharp spikes in volatility. It seems that assets took a brief pause to digest in yesterday's news from the Fed. However, the antipoding currencies tend to rise along with the US stock market and rising oil prices. The Aussie continued to rise on the range of 0.6389 and 0.6440 during the Asian session. However, it then went flat and traded just above 0.6420. At the same time, the Aussie can find support from internal factors. The fresh inflation data came in higher than expected, reinforcing expectations of an aggressive move for the country's central bank. The Reserve Bank of Australia will hold a meeting on November 7. Last week, central bank's head, Michele Bullock, said that if there was a material upward reversion to the outlook for inflation. The regulator would not hesitate to raise the cash rate further. The New Zealand dollar also rallied and consolidated in the Asian session on Thursday. As a result, the Kiwi dollar pair was trading within a wide range between support of 0.5845 and resistance of 0.5898. However, the Kiwi's recovery has only occurred due to the selling of the US dollar in the market. Economic data from New Zealand is generally weaker than forecast. This factor limits the upward potential of the national currency. The Indian currency has also lost ground today. However, the rupee has been able to maintain moderate gains against the US dollar. Notably, the Indian rupee has been trading within the run. India's biggest problem right now is the geopolitical risks, which are leading to higher prices for oil and commodity. The head of India's central bank believes that India is in a better position than its regional neighbors and can mitigate any potential risks. In addition, India plans to sell its 50-year bonds tomorrow, which are expected to be in a high demand. In October, the Indian stock market saw its biggest outflow since January. Foreign investors sold assets at $2.74 billion last month. And that's all for now, but keep in mind that the market is changing constantly. Subscribe to the InstaForex TV channel, leave your comments and questions below. We will be happy to get your feedback. See you online soon!